sounds good. So let me first of all say 2 words about myself. I'm about 35-year veteran here of Silicon Valley, different startups and some successes and so on. Been in the fintech and other branches of the technology, and keeping my eye on it sharply, especially through the eyes of the younger generation, like my kids that are, as Marty had mentioned, are far more successful than myself. But at least I see the actual trends, and then I have a much better understanding of the change of the world, being older generation. But anyways, let me start by introducing the panel today. So I'll just go chronologically as we have the list. So first will be Pat LaVecchia. Is that the proper pronunciation?
Yeah.
Okay. Hi, Pat. So Pat is the CEO of Oasis Pro Markets. Then we go to Mauro Andriotto, and then he's up there in Switzerland, right?
Yes.
Hey, how are you doing, Mauro?
I'm fine, thank you.
Mauro is representing equity partner SMC Swiss family office. And then we have John Hwin, right?
Johnny.
Yeah, I'll just go. And then he's a partner of Studio Management LLC. And then we have Robert Levin.
Levin.
There we go.
Hey, Arthur, is this a kind of reciprocity for us murdering your name for the last 5 years, or what?
Hey, there's lots of ways of pronouncing this name, right? I just I'm Scottish, so forgive me this. And then we have Robert is representing Emerging Star Capital. And then we have Lauren Stephanian from Pantera Capital. Right. So let's figure this out. The first 2 minutes, I would say, why don't you guys just tell me a little bit about yourself, and then we'll try to figure out what's going on with the crypto assets and what the NFT is and so on. So I would like to start with Pat, if you can tell me a little bit about yourself and what it is that you do.
Great. Thank you, Arthur. Pat LaVecchia, CEO of Oasis Pro Markets. I did speak yesterday. Thank you, Marty, for the invitation. We are a broker-dealer, both traditional and blockchain. On the blockchain front, we are the only ATS in the US registered for digital cash or digital currency for digital securities trading. So what does that mean? That means stablecoin, CBDCs, Bitcoin, ETH for digital securities. Digital securities including equities, exempt, fixed income, all fixed income, collateralization, securitizations, and such. And we're moving into the closed-end mutual fund space. We'll soon have approvals for ETFs, and we're broaching fractionalized real-world assets in the NFT space and a whole host of other yield-bearing assets. My background, just quickly, 25 plus years, Wall Street. I got into crypto about 4 years ago. I ran groups at Credit Suisse and at Bear Stearns JP Morgan. And when I first looked into crypto about 4.5 years ago, I was a skeptic. About almost 3 years ago, now 2.5 to 3 years ago, I and a major DeFi player by the name of MakerDAO launched my broker dealer, changed the name to Oasis Pro Markets. And a lot of what we're doing is going down, improving the capital markets, including almost instantaneous settlement, lower cost, transparency, almost zero counterparty risk, which are all the benefits of blockchain, and bringing that to the regulated market. Thank you.
This is great. How about you, Mauro? Can you tell us a little bit about what you're doing there in Switzerland?
Yeah. I'm an adjunct professor in finance in Italy and Switzerland. I've been teaching at Bocconi University, University of Pisa, and UBC in Geneva. I'm the former quantitative leader of Ernst & Young for the South Europe. And I've been working with the European Commission since 2014 regarding innovation, helping the European Commission to select the projects that are receiving public funding in the Horizon 2020 and Horizon Europe program. And particularly, Horizon Europe is a 95 billion program by the European Commission. I've been sitting also as a jury member of the European Innovation Council till the beginning of 2021. And right now I'm the founder of the European Digital Asset Exchange. It's an exchange that is focusing on security tokens. We have received 2 months ago the green light from the market authority to provide primary and secondary market for institutional, but also for retail investors. We are starting now to the procedure for getting a license in Europe, and that will be a broker-dealer license for organizing a primary market and a secondary market in Europe. That will be an MTF, a multilateral trading facility. And we are starting also an area of the platform that will allow to trade NFT, and also also a combination of NFT with security and financial contract that will be digitized through NFT or through any other type of structure as a fungible tokens.
Oh, thank you very much, Mauro. And Johnny, can you tell us a little bit about yourself?
Yes, hey everyone. I'm an artist and serial entrepreneur. I'm a singer, producer of the band Cathedrals, but also co-founder of a company called Thistle, plant-based food company that's grown to about 600 employees now. Currently, I'm the partner of Studio Management, which is a family office that invests across public equities and venture capital. I run the venture capital group at our firm. My business partner, Olive Shaw, who runs the public equity side, is also the founder and chairman, former CEO of a company called Sentio, which is a Bloomberg terminal competitor that's grown to over a couple hundred employees. And we take that same data-driven approach on the public equity side into the venture side as well. He and I also co-founded Thistle together. And so a lot of what we do on the venture side is we're very opportunistic investors investing across stages. We'll do everything from pre-seed to Series B and above. We're very sector agnostic, but we have a very strong liking for technology investments, crypto investments, blockchain investments. A lot of the profits that we'll make on the public side will then reinvest into the private side, and we'll also include a lot of our LPs through syndicates in our hedge fund as well.
Robert, you already told us a little bit about yourself, but do you want to add a few things about yourself? Robert?
Sure. Yes, so thank you very much, Arthur. Pleasure to be here. I'm Robert Levin, CEO of Emerging Start Capital. I'm launching a fund in the next 60 days focused on DeFi, backed by 3 family offices, Fleck Family Office in Aspen, and OLS Ventures in New York, and Kalin Family Office in Washington, DC. That's a total of about 450 million between the 3 of them. And we're launching with capital from the 3 partners, 2 of which made money in Celsius, which I directed them to invest in during the SAFT, this simple agreement for future tokens. It was less than 14 cents, and it peaked at about $8, so up about 4,500% in the lending sector of DeFi. So my background is 12 years on Wall Street working for major firms. I was with my family's firm when it was number 53 in the Forbes list of privately held companies with offices in 30 countries. So I have a background trading commodity futures. And then I left for Solomon Brothers after getting an MBA and worked there at the same time that the author of Liar's Poker was writing a book about. Then I left to work for Paul Tudor Jones and traded currencies and commodity futures, and then left to work for Louis Bacon, who's one of the top 5 landowners now in Colorado. Anyway, so then I left to become a professor of finance at Columbia Business School, teaching investment strategy, and then I launched a company with one of my investors who's here, who's chairman of a company that became a tech pioneer of the World Economic Forum, and it is an artificial intelligence company. So I got fascinated with crypto in 2016 and started working with issuers in 2017, and started with a consortium of investors in 2018 in DeFi. And at that time, DeFi had total value locked of less than $10 million, but I picked one that became one of the winners. So that led to our track record. So the sectors now have developed into 5 major sectors: derivatives, asset management, governance, lending, and payments in DeFi. And the total value locked has risen from 2019 of 10 million, meaning money secured in the smart contracts. So locked is a misnomer, could leave, but generally means money being spent by pools of liquidity on DeFi protocols. So that's what the definition of total value locked is. So that's, it rose from over 10 million in 2019 to over 270 billion now. So that is a huge exponential rise. MakerDAO was the majority of total value locked in 2019, but it's still a very significant amount of total value locked. So what we're seeing now are major institutions, large venture firms like Pantera, Andreessen Horowitz, and Digital Currency Group, a multi-billion-dollar fund led by Barry Silbert and others, coming into DeFi, both the infrastructure layer as well as the application layer in these 5 categories I outlined. So my strong sense is that this is a market that is here to stay. It's going to eventually disrupt the banking sector and other subsectors of the financial sector, including lending institutions, investment banks. So we already see at least one digital bank chartered at the federal level and several at the state level, including 2 in Wyoming, Kraken and Avant. So we're very bullish on DeFi because the scalable protocol has so much value, not just in monetary value, but in real customer relationship value at a decentralized level. So I'd be happy to go in more detail if you ask me questions. Thank you.
Sounds good. Thank you. Lauren, can you tell us a few words about yourself and what do you do at Pantera Capital?
Sure. I'll also give a brief description of Pantera as well. Just for anybody who's not familiar, we're, I believe, the oldest crypto fund, having been founded in 2013 by Dan Moorhead, the ex-CFO of Tiger. We've grown a ton in recent years. We're about 50 people now and have around 7 billion in assets under management. I've been with Pantera for around 4 years. Before Pantera, I was a software developer on a trading platform, and then worked in trading at Bank of America doing interest rate options. Got interested in crypto, having seen the entire trade life cycle, in particular DeFi, and basically made the jump into crypto full time, and currently on the investment team.
Great, fantastic. So, so understanding the crypto world and all that is going on here with all the acronyms and such, everybody in the family offices can totally get lost. So I would say, why don't we start with you, Pat, if you can, in the best, simplest word, explain what NFT is, okay? Because that's the biggest elephant in the room, right? I mean, it's a tough
Somebody else will take that.
or anybody else that wants to pick that up. And then we'll go from there.
Well, it's simply a non-fungible token. So due to the fact that it's tied to a smart contract, you're able to make it very bespoke. You can actually think of smart contracts as coding at the end of the day. And, you know, in a nutshell, that's what NFTs are. It's a bit confusing because when you look at the memes that are becoming NFTs right now, depending on your taste in art, or from a social standpoint, what you think is acceptable, and the prices commanded for CryptoPunks or the apes, et cetera, it doesn't seem to make a lot of sense. But we can talk about that a little later. Yesterday on the panel, we discussed it. It's really, at the end of the day, it's supply and demand, and value is what someone is willing to pay for it. So if you think about at a very basic level that NFTs are collectibles, then I think that starts bringing it all together. But what does it mean? Does it mean that you have the licensing rights to that particular mem? Maybe, maybe not. It all depends on the coding of that particular NFT. So it's NFTs are not, there's truly not just a basic outline of what an NFT is. And I'll take it a step further. Earlier I said real world assets, fractionalized NFTs. What is that? Well, real estate, a real estate property. You take a real estate property, it has monthly rents coming in, revenue, their payouts in terms of dividends, if it's a REIT of some type, et cetera. That can all be built into an NFT, fractionalized. What does that mean? That means it's a security. And if that occurs, then it could trade on a platform like Oasis Pro Markets. So the description of NFTs is going to expand in the near future.
Anybody else wants to clarify that, or that's?
I'd like to add that we're currently up about 650% from the lows last July in the NFT index, which is 9 prominent examples of NFTs. But also we're beginning to go into the next stage of protocol innovation in NFTs, which is, I would call it NFT 2.0. And my colleague, Anita, is an expert in NFTs, and she can discuss what goes into the smart contract in the next 2 generations. If you don't mind me subcontracting with Anita. Anita, could just explain what goes into the smart contract, not the collectible side, but the streaming, video streaming, the royalty streaming side.
Absolutely. I think it's really, both of you, like, it's really fantastic, beginner explanation. Fungibility versus non-fungibility is most important to understand, because for both you can use smart contracts. Smart contracts can be used just as a blockchain protocol layer, nothing to do with cryptographic driven approach. Any bit of data can be non-fungibilized. I mean, that means it can be a data of health record that actually can be an NFT, because there is a direct origination of the creator that's attached to the original smart contract. That means you own the right. So the ownership of the data is actually one way also you can apply NFTs. And there are already some companies doing some really remarkable work that is beyond art and the art world, where they're beginning to use it for health data. And then how do you do that for genetic coded data, for example? So NFTs has, I think, much broader applications beyond, of course, the art and the collectibles. It's a whole creator economy, which is projected to be $100 billion in the next 5 to 10 years. That means it's unlocking an individual creator, because today you have intermediaries representing who the creator is, who the ownership is, what is the authentication and the certification process. But through an NFT, you directly attach that through a smart contract mechanism as to who the owner is. And then hence the owner can forever dictate the terms of what you want to get from that asset that you've created.
Did you also mention streaming royalties? So with gaming and other industries. So
yeah, and also, again, I don't know if you've talked much about metaverse. There's another layer that's kind of getting built, where future of a website is going to be a metaverse and not a website. It means we are building another layer on top of the current internet, which is the Web3. So with the Web3 architecture, how it's evolving, NFT becomes pretty much an access. If you were to think about Bitcoin as equivalent to federal, Ethereum is a currency, NFT is actually access. So the non-fungible tokenization means any bit of data is unique in itself, has its own unique value, and how you actually dictate the terms. really drive majority of the application layers. So I think what we're already beginning to witness, while of course, we're in Art Basel happening, so there's a lot of art and collectible focus, but music rights and publishing rights, and then like, film, the way I release a film now, and that becomes an asset, and how do you reach out to your consumer? Community becomes intrinsic to NFTs. That means if you have a large following, you can very quickly capitalize through direct engagement. So there are like, I think, multi-layer applications already beginning to happen. And there's several folks from the basic layer of collectible, I can create a cool meme, to everything else and then sell it. But also the next layer of how can we use that for industrial use cases? But there's health tech, ag tech, fintech, and all that.
Fabulous, thank you. That's why I brought her.
Thanks, Mauro. What's going on in Europe with the NFTs? How is Europe looking at it from legislative point of view, and what is your exact involvement there?
Well, I have the impression that NFTs have been pushed a lot from the moment that any other type of tokens, above all in US, is seen as a security by the SEC. So the market has been concentrated on something that can be easily traded and issued, and in this case, NFT is an example. I have to say that in Europe, we are a little bit slower, but we are starting also to, well, the investor community is very active as all around the world. From the company side, so from the project side, we are starting now to have some really interesting project, above all in Italy, for example, where clearly art is an important part of the Italian economy. We are starting, for example, we are working with an historical family where they would like to create NFTs of their historical collection. And in this case, the NFT would be the right to digitally reproduce any art piece. So there will be one NFT for every art piece. And if you buy the NFT, you will be the only one that will own the possibility to reproduce that art piece digitally. This is particularly interesting, and clearly this project has a legal side that is very important. We are working on this project with one of the main Italian law firm. And in this case, I think that it makes sense, even if I have seen also projects where they are trying to represent a piece of real estate with an NFT. And actually, I don't understand very much what is the meaning of this project. In my opinion, the best use case for NFTs is when you have something that is digital that can be included inside the NFT. So, or you have a particular right, as in that case of the first project that I was talking about, where the right is included inside the NFT. But for example, creation of NFT of a bottle of wine, that is another project that I have seen recently. It doesn't really make any sense, because if I want to buy the bottle of wine, I can buy it, and then they can send me the wine. I cannot drink the NFT unless that NFT is representing a special bottle of wine that is stored in a vault or in a safe somewhere. So I wanted to trade the NFT that is the ownership certificate of that bottle of wine. Another use case, another project that we are working on is in Switzerland, where we are digitizing the share of hockey team that it's playing in the major league in Switzerland. And we are creating also an NFT platform that will be parallel to the security that will be traded on our platform. And this clearly will be on based on the example of the MBAs in Switzerland, in US, sorry. And I think this is another interesting use case, because in that one you have the possibility to buy something that it's already digital, has been created in a digital way, and you buy the digital way is included in the NFT, and you are the only owner, and you are also the owner of the rights that are attached to that digital piece of code.
Well, thank you, Mauro, for telling us what's going on over there in Europe. Let me go back and switch over to our side of artistic applications, and then I wanted to ask Johnny about the opportunities, and I understand that everybody pretty much figures that the NFTs are interconnected directly into the crypto, and seeing the uptick in the 2017 and then the major crash later on. What is the view on evaluating the NFTs, and how are you positioning yourself with the other partners in the family office networks? Do you syndicate any of those deals, and how you mitigate the potential risks of not knowing really what the NFTs real true value is?
Yeah, I think for us, we look at this. I think NFTs are just one small piece, or rather a large piece, but one piece of this foundational technology shift that we're seeing right now with Web3. Right, which we believe is as foundational to, as big, if not bigger than Web 2.0 shift to Web 1, or even mobile to desktop. I think with Web 3 technologies, we're starting to see, NFTs, all DeFi applications, other markets being disrupted through a set of technologies that allows people to decentralize what used to be very centrally owned experiences. So for example, with crypto now, I think you were referring to the artist use case or musician use case, for example. As a band, we would grow our fans on these platforms like Instagram, Facebook, MySpace back in the day, that were really owned by, within these walled gardens by these companies, right? And so with Web3 and the promise of decentralization, now that ownership can actually come back to the content creator. And that's the huge foundational shift that we're starting to see. So as a family office and as an investment firm, we're looking at this as, and our LPs are looking at this as a huge opportunity to invest in the next set of companies that are going to completely disrupt various markets. In the same way, we used to see Web 2.0 companies, quote unquote, disrupt XYZ markets. The same way we saw mobile first companies, quote unquote, disrupt desktop markets. If you look at the return profile for some of the early stage funds that were playing in this space, in the 2015, 2016, 2017 era, I think CB Insights, there was a slide that says, like, in 2021, we're going to 10x the amount of money flowing into this space. I think the return profile of those funds over the last 5 years is something like 7 to 8x returns on average, with some funds returning 100x. So investors want to go where the alpha is. And so now you see traditional VCs, traditional hedge funds start to put more money into this space. As those folks put more money into this space, a lot of folks, understandably so, feel a lot safer about investing in this space. They feel a lot safer about not getting the rug pulled out from underneath them. And so it's not so much the wild, wild west anymore. It's still a wild west, if you will, but there's still a lot of alpha to be made, but it's not so nebulous that a lot of our LPs won't want to invest into NFT companies, crypto companies, blockchain companies, DeFi companies, et cetera.
Mm-hmm. Great. Well, thanks so much. I'll get back to you with a couple of artistic questions and your specific vertical, because it's very, very interesting. But let me ask Lauren about her investment. What is it, Lauren, that you guys are doing in Pantera as far as the NFTs are concerned? Are you currently actively investing in the in that realm, or what is your main focus nowadays?
Yeah, I mean, what the strategy that we've taken has been investing in the infrastructure that supports the growth of Web3 and the NFT space. So we'll invest into DeFi protocols that might financialize NFTs. We will invest in platforms for buying and selling of NFTs, platforms that fractionalize NFTs, just to give people the picks and shovels to kind of get onboarded into this space and start building in this space as well.
And what does that investment look like in terms of what do you get back? You get tokens in return, or?
So we have a multi-strat fund, and we can invest into any type of asset, whether it's equity or token. So it could be tokens. Most of the time nowadays it's tokens, but what we saw in like maybe a year ago, when it was still a little bit of the bear market, was people preferred raising venture equity. So it just depends kind of what cycle we're in. That kind of determines what founders prefer.
And when you say tokens, you mean new issuance. You don't mean
yes,
like secondary tokens.
I mean, we have done secondary purchases, OTC, but for the most part, for our early stage investments, it's pre-launch tokens.
So
Robert,
Dan Moorhead's favorite, I got just one comment. Dan Moorhead's favorite statement to our group was, everybody talks about how they invested in Bitcoin early, but his best investment was Ethereum at 5 cents.
That was a great one.
Yeah. That's a good one.
Marty, everybody has those stories, you know.
We got another question, Arthur.
Yeah.
Question for the Pantera. How do you evaluate investing in the pick and shovels? When you look at a platform, and obviously you want to be like, just holding on the boom of the asset underneath it. So can you talk a little bit about how do you evaluate when you look at it?
Yeah, it's a great question. I mean, typically for very early stage deals, it depends what stage you're looking at. If there's little to no traction and just a strong team that you're evaluating, you're looking at like, how big is the market size? How much money do I think this company could be worth in, I don't know, 5 or so years? And then, how strong is the team? And then we kind of use comparables. Since we've been in the space since 2013, I've basically built out a dashboard that tracks all of the investments that we've looked at, where they were and how much they raised at successfully. And that kind of helps me price certain companies or determine whether a number that a founder is throwing out is fair or maybe a little bit.
Do you look at things from bottom up or top down?
Both.
I know that Dan's famous for being a trader. Do you guys do any on block analysis or on chain analysis?
Yeah, it's something that we've been doing a lot more with the help of our trading and quant team. So they look at a lot of on-chain data. We've also hired a number of people who are being onboarded who are going to we're running our own nodes, and we're just trying to build a lot of dashboards internally to be able to track new trends, value companies effectively, and protocols, and just see what's up and coming.
Do you think it's worthwhile to extend it on-chain analysis to like other tokens outside of like Bitcoin and other types of crypto?
Definitely, yeah.
It's very interesting. John?
A fundamental question. Apart from momentum, analysis, what the hell do you, how do you evaluate the value of Bitcoin, of any cryptocurrency?
I can answer. So one metric for evaluation of networked protocols is Metcalfe's law. Bob Metcalfe is a professor of finance in Texas, and he came up with the Metcalfe's law of networks. So if you look at LinkedIn, which was equity sold by Reid Hoffman to Microsoft, he sold it at a $22 billion valuation, but it was less than 150 million of revenue. So the price earnings ratio was already very high when he sold it. Why? Because for the network effect. What is it? So with this node can communicate with thousands of nodes peer-to-peer, and thousands of nodes can communicate with millions of nodes, and millions communicate with millions, who have a huge, powerful valuation metric. Now,
yes, but how do you use it?
Well, how do you use it for evaluating potential investments?
The transactions are anonymous. You have a number and nobody knows that you're part of a node or
So
not.
with
So all these
chain analysis,
how do you
the,
deploy this network for real economic
So-
return?
with the chain analysis on chain, you can evaluate the network effect by looking at the number of nodes and seeing the developer activity on those nodes and seeing the rate of growth of developer activity, which is akin to brand equity in the field of goodwill
Again, you
valuation.
have the chain, I grant you, but how do you use it? What use do you put to it?
So there's thousands of uses, and the main use case scenarios would take an hour to describe it. Essentially, the advantage of DeFi decentralized networks is that every node can operate independently with automatic authority from the central.
You're
It's already been
describing the
delegated.
network, you're not describing how it can be deployed for real economic gain else than the
Well, like-
nodes trading numbers between each other.
John, I think we've been down this road with many people. And I think what will happen is at some point, there's gonna be an example that will just trigger and all the dominoes will fall with you. So what I'd like to do is table that and just move on. And what we're gonna do is we're gonna talk to you at the reception. And we're gonna tell, each one of us will give an example to you of a way it works.
All right,
Can
so
can I just throw
Wait, I
in
want Pat.
one thing?
And the
rather than-
second question is, why is Bitcoin quoted in dollars?
Well, I'm gonna, we'll table that for later. We'll table that for later. But John, the way I would think about this is let's table Bitcoin to later on. But the benefits of the blockchain, which is what we're all describing here, are very evident. So the benefits, when I talk about capital markets and trading, there isn't instantaneous settlement today. With the blockchain, there is. There is counterparty risk. With the blockchain, there's almost zero. I'd like to say zero, but from a regulatory standpoint, I can't say that. There are lower costs. It's an immutable record. That's all evident. So that's the blockchain that these cryptos trade on. So your question is about Bitcoin specifically.
In a fund that's in
But-
blockchain
But
technology.
blockchain
That's
itself, this evolution of technology is
Right.
what we're all excited about. And these applications are being built on top of it.
That's correct. But we were talking about Bitcoin for the moment.
Well, that was your question. I
So-
think we agreed to table that.
So
Currency in general.
there is no CEO for Bitcoin, no board of advisors, no compliance. So we differentiate between the 1/3 of 3 trillion, about $1 trillion in the unregulated zombie protocol category. The others, Ethereum, which is a fabulous over $600 billion market cap, Cardano over $65 billion market cap. These are highly specific protocols with governance built in, compliance, protocol innovation that applies to industry to bring all of the advantages that he's talking about to the consumer and to B2B as well. So we can talk about it during the break.
Again, Gudrun has a question. Gudrun?
Yeah, Robert, you had mentioned there are 5 buckets for DeFi that you named. As you're launching your new fund, which of those buckets do you think you'll give the most weight to? And
Thank
why?
you. That's a wonderful question. So number one, lending, BlockFi, Circle, Celsius are examples in that space. There are many others where you can do yield farming and get to earn 8 to 20%, mostly in the range of 8 to 12%, but all the way up to 50% if you want to take more risk in yield farming. Second is decentralized exchanges, where we see rapid growth because of the liquidity pools that are attached. These are like little broker dealers, independent providers of capital to directly invest in protocols as well as swap through exchanges. So we see decentralized exchanges as a big growth sector in DeFi, and of course others as well. Lending, payments is another big one.
And just.
I just want to ask, because we're throwing all those acronyms, and I'm pretty sure there's a number of people that they have no clue what it is that we're talking about, right? There's a DeFi, there's NFT, there is the blockchain, right? And then we're mixing all of those terms all together.
So
A little bit.
I have one more question from the audience, and then we'll get back to you.
Yeah,
Russ?
Okay.
Robert, just rename the 5 buckets.
Okay.
So derivatives, payments, governance, lending, and decentralized exchanges. Payments, decentralized exchanges, governance, and lending and
Which one is debanking under?
well, banking is a bunch of applications, so it's, I would say lending,
Okay.
number one. And you can go to DeFi Pulse and DeFi Llama and see Llama like the animal with 2 L's, DeFi Llama and DeFi Pulse, and see all of these categories. And you can see the total value locked is close to 270 billion according to DeFi Llama, which is really not locked. It's secured by the smart contracts.
Okay, great. Back to Arthur. Arthur.
Yeah, I just wanted to clarify, because I know that there's a number of people that are here logged in and watching our discussion, and then they probably are confused in terms of all of the acronyms that we're throwing at them. So I just want to go back to clarify the low boundaries between DeFi, blockchain, and NFTs, right? Because the DeFi is one term, then there's the blockchain, and then there's NFT. I just wanted to ask you, Robert, if you can just in the simplest possible word.
In the simplest possible metaphor, the blockchain is it's not an acronym, it's from 2009, the original white paper of Satoshi Nakamoto. But since then, there's been a proliferation of blockchain type protocols, and with either proof of stake, proof of work, proof of authority, et cetera, proof of history. There's all these different mathematical constructs for defining the relationship between the miners and the protocol innovation. So number one, this is an infrastructure layer, for example, that Lauren said Pantera is investing in. And then there's the application layer. In the application layer, there's decentralized applications in the fintech sector of crypto, over 10,000 tokens, of which about 500-600 are in the DeFi sector of crypto. So out of the 3 trillion, about 270 billion is in fintech sector of crypto called DeFi, for short for decentralized finance. And NFTs, as Anita said, are non-fungible tokens, and some can be made into fungible tokens depending on the innovation in the smart contract, which is programmed in Solidity. So think of it as a programming language like C++, only for the smart contract that's embedded in the protocol that defines the parameters and the rules of operating between the nodes in a decentralized network. Is that helpful?
Sounds good. Yeah, I mean, to me, it's probably helpful. I mean, I have my own imagination of what the whole thing works like, being a computer programmer and a software engineer for many years, but I'm pretty sure that I get lost. I mean, I honestly don't get it all the way through to the end, right?
Well, so
it goes too fast for me. Maybe I'm too old.
For those who have no programming background, no investment background in this space, think of the digital ledger technology infrastructure, the blockchains, hundreds of them, either public, private, or hybrid, as being the railroad. And on top of the railroad are the boxcars, which is a metaphor for applications like decentralized exchanges and lending platforms and governance tokens, for example.
So one quick thing about the exchanges, like let's take the exchanges as a subject. So I have an NFT that I somehow define. How does one figures out what the valuation of those tokens are? Like once you get into the exchanges, just like market value, whatever it is that the people are willing to put up in terms of their as far as the valuation of those things. Maybe you can help me out with this, Jimmy. Have you done those?
Well, it really depends by the asset that is behind that NFT, because I mean, if, for example, you have a real estate, like you have a house, and that house is producing rents, then the value of that NFT will just be the discounted future rents of that house, of that building. So it's not because you apply blockchain unless some particular cases where you can use the network effect, or there are some, but it's not because you are using blockchain to distribute a security that you are changing the value of the security. The security in that case will be the same as the asset that is behind that NFT will be the same. And in my opinion, for all the other types of cryptocurrency, is just a matter of demand and offer. So there are a lot of microeconomic models that can explain, for example, the velocity of the currency, the amount of demand, the amount of token that are going to be held by people. These are all explaining and there are some mathematical formula that you can use to see what is the price. Clearly, why Bitcoin now is increasing, on why it started from 1 cent and now is at $50,000-$60,000, because there are a lot of people that want to buy it. And as much as you will have people in future that will decide to buy Bitcoin, the price of Bitcoin will grow. If tomorrow everybody is substituting Bitcoin with Ethereum, Bitcoin will go down and Ethereum will go up. And that's in general how it works.
Arthur, in regards to your question about NFTs, so unlike Bitcoin and the cryptos, there's very little volume. There's no order book whatsoever. What you typically see when you go to a site like Fractional or OpenSea, there are a whole number of these NFT platforms. There's a ask by the owner of that particular NFT, because there's just not a very liquid market away from some of these crypto punks, et cetera, that you've heard about. But that's such a small piece of the whole NFT space.
So it's like a pink sheet right now of the crypto world. Just using the analogy of where the NFT right now stands. So you have to actually find a means in which you trigger somebody purchase it, but you also have to drive the market, and you have to have a platform that drives that market. There is no a singular unified place where you can say, I'd like to be participant in that particular token, NFT token from across the globe, because there's no such place yet. Am I correct? So that's opportunity, I guess, to unify all of the NFTs and being able to move on forward. I just wanted to ask you, Jimmy. So you're in an artistic world. So you must have probably you're the closest one to actually try to come up with some creative means in which you are utilizing this new technology. Can you tell us about like your investment, your involvements, and how you're thinking of using the NFT with some of your investments, or some of the current experiences that you already have using the NFTs?
Yeah, definitely. It's Johnny, by the way.
Hey.
No. Yeah, I think similar to Pantera and to what Lauren said earlier, as a firm, we're very interested in investing in the picks and shovels of just general technology companies. And I think, again, we spoke earlier about Web3's foundational shift. One of the other things that we've been really interested in is just investing people, just the entrepreneur itself, himself, herself, especially in this new world. We've invested in an entrepreneur who has been running around as essentially an agent, an NFT agent in the space, helping artists in the offline world, if you will, mint NFTs, go online, connecting these artists to brands, connecting the artists to galleries, etc. So that was an investment we made in the space. As an artist, I think one of the most interesting pieces for how we've been thinking about leveraging NFTs is using it as a way to securitize the assets that we've been producing as a band, in my case, specifically as a band. You're starting to see folks do things like offer a percentage of the master of their music as an NFT that other people can buy into. All of a sudden, before, musicians were relying on record labels as a way to get money. So record labels in the music world, for those who don't know, are basically the VCs, right? Musicians are the quote unquote startups. And the difference is in the music industry, the artists are giving up 90%. Now the opportunity is, let's say if I were to start a new band today, I could, and I had a built-in audience, I could offer my audience to essentially own a piece of the master, the piece of the rights of the music that I produce. And I could tokenize that, if you will, and offer that to my fans. My fans can then buy a percentage of my of the master of my song, and I can use that money as fundraising. I think that's part of why you start to see that mechanic, that underlying mechanic that underpins all of this is also part of why we're starting to see valuations of a lot of startups in the space, go so high up, because whereas in the past you had a small number of traditional VCs on Sand Hill Road setting the market for what startup X is worth, all of a sudden, if you're an entrepreneur today, if you're a builder, if you're an artist, your access to funding is no longer isolated to that several mile strip on Sand Hill Road, right? You have you can create a token, and all of a sudden your fans, your consumers, your users can be investors in your platform. And then also you're seeing a number of brand new firms that don't exist in Silicon Valley or New York or LA primarily prop up because of all the money that's being created in the space. And all of a sudden you have so much more access to capital, which allows the valuations to rise. I mean, I have a friend right now who's raising, he runs a DeFi company. He set out to raise $8 million, and he already has $20 million soft circled without a lead. Most of the folks who've raised their hand are high net worth individuals who've done really well, smaller investment firms who are brand new. And now he's trying to go to Silicon Valley, actually, literally down Sand Hill Road, to talk to the bigger firms and say, hey, I have 20 million soft circled, but I'd love a strategic lead because there's still value in that brand equity, right? Of a Andreessen Horowitz or Slow Ventures or Khosla, et cetera, and particularly for recruiting purposes. But you're starting to see more and more entrepreneurs, and you're starting to hear more and more stories just like that.
The quick question, just follow-up question to this. So essentially, I'm the user. I'm the one person that invests into, let's say, a percentage of the smart contract through the NFT. What is my exit strategy? I mean, how can I get my money back? Like when I see the band is actually performing extremely well, and what's my exit in this situation? Like,
yes.
Like let's say I'm putting up, like you're offering 5% of your contract for your album as an artist, right? And then I'm investing and I'm buying up at 1.5% of that contract. And then how is the proceeds of your concerts or whatever it is, or sales of your streaming of your Spotify or whatever, how do I get part of it? Is that what it is? It's just like streaming percentage as part of percentage of your take, or
yes.
I mean, as an end user, I'm the investor, so I'm more concerned about that.
Right. So just taking a step back, like looking at the fundamental. If you buy a token in my band or a company, the value of that token rises as a function of really belief in whether that company or band will be successful. And that belief is a function of, in the company's case, revenue numbers, user numbers. In the band's case, user numbers, streaming numbers, things like that. And so, unlike buying equity into a company where you can only cash out when there's a liquidity event, or if there's I guess now there's more secondary exchanges, so there's more opportunity to cash out. Tokens typically are much more liquid, and you're able to sell tokens to other fans of the band. In the case of the music use case, and so if you are an early token holder, if you will, of my band, if you were there early, and because of your vehement love of my band, our fan number grows 10, 100x. so too will the value of that token. So you as a token holder are actually incentivized to promote the band as much as possible to increase the value of your ownership. And then, in the future, you'll have the opportunity to sell part of that as well.
And this the selling it is one of those private mechanism exchanges that are tied into a particular place where those NFTs are being sold, right?
Yeah, I think to Lauren's point earlier, there's a number of different exchanges, different marketplaces rather, where people are buying and selling tokens for different categories. So OpenSea is a great one for art. There soon will be things like that for music and music streaming royalties, I'm sure. And I think what's interesting is we're not even in the first inning of all of this. We're still singing the national anthem, if you will. There's so many new platforms that are going to be built. It's a really exciting time right now to be both an investor and an entrepreneur.
So these things are really non-dividend paying securities.
Well, some could be, but not generally not the existing NFTs out there. For the most part, they're not securities.
Why not?
Well, they're not fractionalized.
You have
They don't
unit
mean-
ownership in assets.
Well, that's only if they're fractionalized. And then there's a whole body of law that's being explored right now regarding that's why real world assets. So not a digital representation of, as we've been talking about. By the way, there are some music platforms. I'm an angel investor in a lot of DeFi projects. There's one with One Confirmation that I'm an angel investor with that is doing, just quickly, think of special albums coming out of your favorite artists. So you can buy a digital representation, and that when it's sold, the artist still gets a percentage of the royalties that the artist sets.
Yeah.
But the coolest thing is the ownership of that song or album is still with the artist in regards to other market venues. So it's really cool. It's called catalog.io. But to your point right now, real world assets fractionalized, absolutely. Hester Peirce, the SEC commissioner, came out about 4 months ago, and she's the biggest proponent on the SEC board right now for blockchain and NFTs, et cetera. And she said, it's a difficult argument for me to make that real world assets fractionalized are not a security. So that's the direction. There's a lot of ambiguity right now. But in regards to these other NFTs that we're talking about, they're not securities necessarily.
So a single ownership entity would not be in there.
Definitely not.
But a fractionalized one could be regarded.
That's my argument.
Right.
But there's a lot of folks on the other side.
Looms, right?
Yes, yeah.
And
That's a good point. There's a lot of regulation
it
coming.
looms on the whole of the cryptocurrency environment.
And that's what we're excited about, because we're regulatory forward, we're compliance forward. I'm on the phone with the SEC. I'm not bragging about this because I have to be, but the SEC, FINRA, CFTC, or members of my team all the time. And frankly, that's where it's heading. And that's why MakerDAO, which is a true DeFi platform, completely anonymous, backed this and partnered with me 2.5 years ago, because it was before anybody was thinking about regulation or compliance for the crypto space. And to the point made earlier, when I got involved with MakerDAO, I think their assets. Their loans outstanding were 50 million about 3 years ago. Now it's over 10 billion. So there's been tremendous growth, but they recognize that compliance, what's compliance, KYC, AML was important in all this. So that's coming. It's looming, and it's coming.
We have about 5 minutes left, so. Good.
Yeah, I have a question for Lauren. Lauren, as one of your investors, what I'm trying to understand is, as you built a database of valuing these NFTs. More or less.
Protocols and companies.
Okay, so my question is, could you share with us what you think are some of the criteria that we should be looking at when we get documents sent to us from somebody saying, invested in this NFT, And we're supposed to sit here and decide whether or not that NFT is overpriced, underpriced, and we understand the whole story, but it depends on the community and what cash flows and all that. Or
So
how are you helping us get to the point?
we don't invest directly in NFTs, but we invest in crypto assets that are fungible, generally tokens that founders use they issue to us when they're raising capital. And basically it's kind of similar to evaluating a company. There's a few differences. I basically put on different lenses depending on what kind of asset I'm looking at. But these protocols, decentralized applications, generally take fees and they produce revenue for the network. And it depends how the founders kind of split up where the revenue goes to. A chunk of it tends to go to a treasury pile, and then people have ownership of that treasury via the tokens. These protocols are set up all different types of ways. So you really have to think through like, where is the money being made? And overall as a network, how does this compare valuation to revenue versus other protocols in the market? And that's how I kind of look at things as being either expensive or cheap. I kind of see like, oh, like MakerDAO might be pulling in X amount of revenue a year and they're at this valuation. If this other stable coin is trying to raise a capital, I'll look at MakerDAO as a comparable.
I have a question about on-chain versus fundamentals that like people like Thomas Lee has used in the past, but I'm not going to talk about it right now. We'll talk about it at the reception. Any other questions?
Yeah,
Yes,
just a quick one.
Andrea?
So, I mean, when it comes to code, it's one of the most indefensible, like it just doesn't hold usually, and you know, when it comes to patent protection. But the other thing is it not true that if a physical art is to be minted, and if it's done on different blockchains, each one is still considered a true NFT, which is very bothersome, right? Because as an art collector, that's a huge problem because it dilutes the value of a particular digital art, right? So to speak. So are you guys able to kind of talk about all the things in the underbelly of all of this seemingly very promising, but it's not about posted issues. So you guys could just talk about it, especially
30 seconds or less each person.
Think of the software, think of the NFT software layer, as Anita Valuations said, as an access vehicle. And the intrinsic value is in the provenance of the music or art or the network effect of the other underlying asset. So there's other metrics for valuing, and most of them have to do with the artist and their followers and the community they've built and the value of the revenue streams associated with that community and followership. So the brand equity is also a factor, goodwill is a factor, network effect, but the NFT layer is the way that it's distributed, and it creates value through ease of distribution in fractional
and
ways.
that's all beautiful and good, but just as a recovering attorney, I guess I'm just looking at it from a regulatory, like there are a host of issues, and we're seeing it now, right?
So-
Lawsuits left and right.
Well, what do
So-
the other people think?
Yeah.
What are your thoughts?
I don't have a strong opinion on like legal ownership of a piece of art tied to like code, but what's interesting to me about NFTs in particular is not the legal aspect. It's you have a community built around a project that might be released, and that's what makes it interesting. Like people will focus on either maybe it's a Solana community, maybe it's an Ethereum based community, but you typically don't have replicas across two different chains. I mean, you might have like copy projects, but they get less attention.
Pat?
I'm also, I don't have a strong opinion either way, but yeah, I completely agree with you. In the next 12 to 24 months, it's going to become a major issue.
I mean,
Because these other platforms are really
Yeah,
scaling
we're
quickly.
seeing all of these SEC letters, so it's
Right.
great until it's not.
there's a whole flood of products coming out there, and as you said, there has to be some kind of a structure around that. Any other questions? Do we have any questions from the audience?
I'd like to make one more point, because the elephant in the room is what is Hester Pearson and Gary Gensler and the team governing crypto going to do with regard to these, the Howey test applied to NFTs and other derivatives in this space. So because Gensler taught a course in cryptocurrency at MIT last year. It was a very popular course, and he was head of the CFTC. He really does understand, the currency world better than most people in the commodities world and the intrinsic value. So just to repeat, for those who don't know, the 1946 decision of the Supreme Court, US versus Howey, you have to, an investment becomes a security when it's an investment contract to make money. Number two, in a common enterprise, fractionalized or not. Three, with the expectation of profit. Four, to be derived from the efforts of others. So that's the Howey test. And when you apply that to NFTs, it's confusing. It's not straightforward.
It's now about to apply to stacks too. I just saw Bloomberg this morning that they're thinking about bringing that test into a stack.
Yeah,
Especially with ag,
yep.
so
It's
that should be-
it's going to be decided in the next 24 months, as you said. Very important time.
It's pretty interesting. If you guys ever get a chance, you should listen to Steve Miller from the Steve Miller Band. He was put into the Rock and Roll Hall of Fame. And his speech was said that all the people in the audience were leeches that sucked out the money from his career. So it's really fascinating to listen to if anybody's a rock and roll fan. So I think that kind of drives a lot of artists to say, why don't I put this in NFT first? I get the rights, I own it, blah, 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 blah. And I think that's, part of what your music group is doing as well. So.
Exactly.
All right, Arthur, great job. Thanks so
Oh,
much.
thank you very much.
More-
Yeah, thanks everybody. So sorry, Johnny, I'm a little bit dyslexic, but
Fantastic, great. And
I'm meeting you all remotely.
and Johnny, we're all going to your reception. We'll see you in.
We'll be hosting a
45
reception afterwards, about 5 minutes south of
Could
here.
you announce the location?
I've shared the address of everybody.
Yeah.
You'll get it from me later.
No, it's a little bit,
Great.
5-minute drive.